Well, hello. We have quite a rally in Litecoin, and it is not the only crypto that is rallying at the moment. As a matter of fact, we have rallied so far up that it's starting to look more and more like the bottom may be behind us, but we're not out of the woods yet. So we're going to look over what we have here. Got two alternate patterns in the short-term 30-minute Litecoin chart. This is what our rally looks like since we hit our bottom on January 22nd. Litecoin actually bottomed a little bit earlier than most of their cryptos, which bottomed on January 24th, which actually leads me to believe that this slightly higher low may be the actual bottom, especially when you zoom in closely. It looks like an impulsive wave down. So maybe it's a truncated fifth wave or something like that. But we have that, and then we have, after some sideways whipsaw, we have just taken right off. We're up to about $139, something like that. We had a slightly higher peak earlier today, actually earlier yesterday, February 8th. We've started a bit of a consolidation, and so far, it doesn't look like anything particularly bearish at the moment. Now, there are two interpretations here. I'm going to go with the green first. That is our bullish, optimistic interpretation, and it actually looks more convincing in Litecoin than most other cryptocurrencies, in that this is our 1-2 right here, and we have a third wave that fell a little short of our standard target of 1.382 extension. Small fourth of consolidation, and we have since rocketed all the way up past the 2.0. So we've actually extended past the ideal max extension you'd expect for a fifth wave. So is that a good thing? Is that a bad thing? It's to be seen. If this is the fifth wave, we should expect to see a consolidation that will go relatively deep, especially because it's been a little bit choppy. Expect a deep second wave to reset sentiment. However, this could actually be a fourth wave consolidation. We may have a fifth wave that goes a little bit higher. Therefore, this could be a third of extension. Those are the two optimistic interpretations of what we're seeing here. The pessimistic interpretation is that this is actually a big ABC wave, and I've actually got the extensions out here for that. We've actually extended almost too high even for this to be a C wave, but when you look at the shape, again, it's non-ideal looking. In a lot of other cryptos, it doesn't look particularly impulsive, including Bitcoin. You have this weird, bizarre structure that could be a subwave 1, and maybe that's the subwave 3. And well, as soon as my chart gets going, here we go. So Ethereum, again, very non-standard looking pattern. Not really sure what to expect here. So I'm expecting a pullback. That's what I'm expecting. We're going to see how it pulls back, how it corrects. We want to see a healthy correction before it can launch up, which brings me to shift to our big picture logarithmic chart. If you'd like to follow along in this chart, this will be pasted in the description below, so check out that link. So this pattern is calling for this top in May of 2021 to be a larger third wave, which we can project because Litecoin has been around a bit longer than a lot of the altcoins have. So you have a bit more history to work with on this. When we zoom up to see our current situation, red is still primary. So that was calling for a lower low and that this is actually a fourth wave bounce. I'm actually going to take away this MACD view real quick. Give us a better look at this thing. We spiked down, of course, on January 22nd. Quite a bounce ever since. And well, we could interpret this as 3 waves down. Apologies for not marking that. Actually, I could do that right here. So where's my ABC pattern? Here we go. So starting from the top, we're calling our B wave. This could be the A wave here, B wave, and this could be the final C wave. If that's the case, we should have probably gotten to the, well, at least the 78, 79 mark. We came up a little short of that ideal extension point. And in addition to that, our ideal point of retrace would have been about $76. I think I have a note of that on here somewhere. That is, of course, based on our correction from our top in May of 2021. Typically, your C wave is a 1.0 extension of your AB, so it would be equal in length to the A wave. That would put us at 76. We haven't hit that. However, we did break our low that we hit the midsummer. So there's several indications that are causing me to lean towards red as my primary, just because it doesn't look complete. We didn't quite go as deep as we should have. We don't have that 1-to-1 ratio of A to C. If that is the case, this blue box highlights where we should land ideally, but should is not reality. We have to accept what is. We may be done. And that is what the green pattern is specifying here. We had our bottom, and as I've showed on the other screen, we may have 5 up. It could be an ABC up. We may not be complete with our 5-wave structure up initially. Not sure yet. We got to see how this develops. I would expect to see some kind of a pullback because we are a little extended for this to be an impulse. That would be a healthy correction. And if we get a 3-wave correction back and then we rally past the top again, that would be a buy alert. Time to buy your pants up at that point. So I know I will be, just because I didn't buy the dip a couple of weeks ago. Where can we go if we are done with this correction so far? Well, I have this projected based on going all the way into this blue box. So these projections are going to be a little bit lower than if we really are done already with our correction. But we're looking at targets between 214 and 414. I know it's a big range, but until we have a proper first wave up, 5-wave impulse, and a 3-wave down, we can't really project with any more precision than that. But that would be a pretty long way up from where we are at the moment. Again, we're at around 139. Getting up to 214 wouldn't quite be double. That's pretty good for a subwave one, but that would be the minimum target for our first wave up. Now, where are we looking at this thing? Actually, before I get to the long-term picture, what am I looking for? We are red as primary. That'll break if we get our 5-wave rally and a 3-wave correction, and a rally back up past the top that we have. Otherwise, if we do break below our support of 96.61, which is the low that we hit on the 22nd, that more or less invalidates green. That makes it very likely that we're going to fall into this box. And I take all cryptos together. One crypto doesn't necessarily indicate the sentiment of the whole segment. We're going to see what Bitcoin and Ethereum doing, along with other large cryptos, other altcoins. If those are showing a need for a lower low, then that's a very good, potentially very good sale to buy a bigger lump sum than you otherwise would have. So long term, what are we looking at? Well, assuming that we have this 1-2 setup, where are we going from there? Well, your typical standard extension target would be somewhere between the 1.0 and the 1.236 extension. So that would put us potentially at 1205, 2331. That's right, 1205 to 2331. Those are just standard extensions. Assuming that we really are completing the pattern that it looks like we're completing, that is it could be debatable, however, because we have dropped so low. Maybe this whole thing's a diagonal. Maybe we're not following the standard pattern that you'd expect. There's a lot of ifs here. However, there is Fibonacci confluence. That 3rd wave target hit the 0.618 target extension of this larger 1-2. So that is historically our large 1-2 setup from 2017 to 2019. If that is the case, if we hit the 0.618 target extension target on our first subwave here, if this is actually a first subwave, that could mean that we are going straight to, what was that, 8100, something like that. So that is quite a lofty target. Again, we have a lot to prove. We're still not out of the woods yet in Litecoin's correction, and we aren't in any of the cryptos for that matter. Yes, this bullish action is great, but if you have an ending diagonal C wave, this is expected. You can see a big bounce in the 4th wave before the final 5th wave just extinguishes all the bullish sentiment. And that actually allows you to have a much stronger rally later. So either way, be on the lookout. I'm going to be putting out alerts on latest developments. So don't forget to subscribe. And remember, it's time to be greedy when others are fearful. So if we do see a lower low, that's your cue to buy your pants off. And well, if we keep going and the low is behind us, there's a lot of meat left on this bone. It doesn't matter if you buy a couple dozen dollars up from here. Shoot, you could buy way up here at the wave 1. You could wait for the wave 2 that comes later, $200, whatever. There's a lot of room overhead to get some spectacular returns. So don't panic, don't get FOMO. Until next time, thank you for watching and happy trading.